Hey everyone, welcome to today's video. I'm Mark Schuyler, and I've got a lot to cover because some big news just dropped. I'm talking about the Federal Reserve's recent rate cut of 50 basis points. This is something we haven't seen in quite a while, and today I'm going to break down what it means for you, whether you're buying a home, refinancing, or just curious about the impact on the economy. So let's dive in. First off, I have to say, this is more than what most people were expecting. Personally, I thought the Fed would go for a smaller cut, something like 25 basis points. But here we are with a 50 basis point rate reduction. To give you some context, this is the biggest cut since around 2020. And what's interesting is how much buzz this is creating. So much so that even Mortgage News Daily's website is down because of people trying to check what's going on with mortgage rates. But don't worry, I've got you covered. Let's start with the big question that's probably on everyone's mind. Does a Fed rate cut mean mortgage rates are going to drop? Well, here's the deal. It's a bit more complicated than that. The Fed funds rate and mortgage rates are related, but they're not the same thing. Mortgage rates respond to a variety of economic factors, like demand, inflation, and even unemployment. The Fed cut, while important, doesn't directly determine what happens to mortgage rates. Some people are expecting mortgage rates to drop immediately, but that's not always how it plays out. In fact, what we're seeing right now is a bit of a mixed reaction. Even though the Fed announced a 50 basis point cut, mortgage rates haven't dropped by that same amount. This is because the market tends to price in expectations. Basically, what that means is that investors react to what they think will happen before it actually does. It's like if Microsoft announced today that their quarterly financials coming out next month are going to be really bad. People wouldn't wait until the end of the month to sell their stock. They do it now because they anticipate those bad numbers. That's essentially what happens with mortgage rates too. Now let's look at the bond market, which is actually what drives mortgage rates. Here's a simple way to think about it. When the price of the 10-year bond goes down, mortgage rates tend to go down, and vice versa. With this recent announcement, we're seeing some volatility. At first, there was a bit of a spike down, which would indicate rates could come down slightly, but then it balanced back out. Right now, mortgage rates are roughly where they were before the announcement, despite the Fed's rate cut. So, what does this mean for you if you're looking to buy a home or refinance? Well, it means that rates may eventually come down. It's not an instant effect. Mortgage lenders don't just cut rates immediately in response to the Fed. There's a lot of other economic data they consider, things like employment numbers, inflation trends, and overall economic health. If you're planning to refinance, my advice would be to keep watching the market closely. Rates are likely to trend downward over time, but it won't be a straight line down. We'll see ups and downs as the market reacts to different pieces of news, so timing is key. One of the most important things is to stay informed. I'm here to help you do that by breaking down these market changes and what they mean. And if you're buying a home, the best thing you can do is keep an eye on rates and get pre-approved, get yourself a realtor, and be ready. Getting pre-approved gives you the flexibility to lock in a rate when it's favorable for you, even if rates are fluctuating. But I also want to reiterate that waiting for rates to hit some magical low number before making your move can be risky. If home prices go up while you're waiting, you could end up paying more overall. Remember, if you are ready to jump into the market, so are a lot of others sitting on the sidelines. More demand equals higher prices for a limited inventory. One thing I want to stress is that while the Fed's rate cut is definitely good news, we need to be realistic about its impact. Yes, it should help push mortgage rates down, but not necessarily in a direct, one-to-one way. Mortgage rates depend on a lot of moving parts: economic reports on jobs, inflation data, and investor confidence, just to name a few. And right now, we're seeing mixed reactions. For a quick recap, the Federal Reserve cut its rate by 50 basis points, which is big news, and it's more than many, including myself, expected. And while this is likely to put some downward pressure on mortgage rates over time, it's not going to be immediate. Mortgage rates depend on more than just the Fed's actions. They are also tied to what buyers and sellers are expecting and how they react to that news. For now, it looks like we'll see mortgage rates gradually decline, but with some bumps along the way. Remember, if you're planning to refinance or you're on the hunt for a new home, keep an eye on what's happening, but also be ready to act when the time is right. Rates can change quickly, and being prepared will give you the best chance of locking in a favorable rate. Thanks for joining me today. If you found this information helpful, make sure to like the video and subscribe so you don't miss future updates. Stay tuned, stay informed, and as always, I'll be here to help you navigate this crazy market. See you next time.